If you live by the Dow, you die by the Dow. That's a lesson President Trump learned the hard way when the stock market took a historic plunge on Monday. After a rally Tuesday, volatility continued this week. And today, it prompted the president to tweet, quote, "In the old days when good news was reported, the stock market would go up. Today, when good news is reported, the stock market goes down. Big mistake. And we have so much good, parenthetically great, news about the economy." President Trump had no problem taking victory laps when the market was way up. So is it time for him to shoulder a little bit of the blame for the downturn? Joining me now, former Reagan economic advisor Art Laffer. Welcome back to the show, Art.
Thank you very much, Kennedy. How are you today?
So I'm very good. Thank you for asking. So we discussed this a little bit last time you were on. Should the president take responsibility when the Dow rather takes a turn to the toilet?
Of course. I mean, he should take it for it going up, and on balance, he's done really well with the Dow. Let me tell you, it's been a huge up since he was nominated in this marketplace. So he's got a lot to take credit for.
He does, and an 1175 point drop in one day is really something. So it makes me wonder from your point of view, because a lot of people say the president doesn't have a big impact on the stock market. Now, if the president does, what can he do to make sure it keeps going up so you and I can become filthy rich?
Cut taxes, control spending, have sound money, free trade, and minimal regulations, and it will go through the moon,
Yeah.
Kennedy. If he does good policies, he will get the same benefits that Reagan did, that Kennedy did, the other Kennedy, by the way, long time ago, Kennedy. And it'll happen with him, too, and it's happening already. Yeah. He's done a great job for his first year in office. I mean, in economics, he's just done a spectacular job.
He's done a partially spectacular job, and, you know, as you rattle off that list, love what he's doing with regulations. I very much appreciate the tax cuts that, you know, it borders on tax reform. But it's the cutting spending. I mean, if our debt, our looming debt crisis has anything to do with market volatility, people in Congress sure haven't gotten that message that you can't keep borrowing your way to oblivion.
That's very, very true. But, you know, the debt issue and controlling spending is a much longer-term issue than is cutting taxes, for example, or deregulation.
But you got to start somewhere. You got to start.
Well, what's happening with spending as a share of GDP? I would be surprised if spending as a share of GDP is rising. I really would. And when you look at it, Kennedy, it's how you spend the money as well. If you're going to have infrastructure, good infrastructure and military, that's a lot better than paying people not to work.
I agree with you completely. I think we need to do so much in this country in terms of entitlement reform, and we can also have intelligent discussions on how best to spend money supporting men and women in uniform. And maybe there are aspects of military spending that have gotten out of control, and it doesn't make you unpatriotic to take a look at those. But in the meantime, we certainly have to take a look, because both parties are burying their heads. They're looking the other way, and we're looking at an even greater debt share when this president finishes his
Well, I don't think
term.
so. I think the tax cuts are going to raise revenues. So I think you're going to get lesser of a debt share as we go on out in the period. If we get the growth rates of anything like what I think we'll get in 2018, 2019.
What do you think we're going to get?
You know, I think it's going to be above 4%. And, you know, we had that dip in the fourth quarter because people were postponing their income, waiting for the tax cuts. And then you're going to get that growth, maybe 4%, 5% possibly for a quarter or two.
I would love to see that. I would absolutely love to see that. I would love us to start and continue the year with that kind of growth. I think it would be fantastic.
We will, Kennedy. I think you're going to be very happy. And I think the long-term growth rates for the next 2 years will be 3.5%, 4% growth in those years. And that will bring down debt to GDP ratio quite substantially. And then you get your hands around spending. I mean, you know, that's what you got to do. But spending is a far longer range problem than is tax cuts. And I love what he's done on tax cuts. And I love what he's done on regulation. And, you know, he's done a great job all the way around on the economy.
Send him a nice note for Valentine's Day, Art. You are quite
not really
with the president and his policies.
Yes, I am. But, you know, if you look at the first year we did with Reagan, Ronald Reagan, you know, when you look at what we did there, it was a downturn because he delayed the tax cuts. You know, Reagan, the stock market collapsed in the first year and a half. And so this time, this guy's had all of the good things happening. And I think if he just keeps focusing on good economics, he'll become one of the best presidents we've seen.
The Laffer curve right here in the flesh. Thank you so much,
There
Art.
you go. Thank you, Kennedy.
Very good.